Let's touch base with our special guest then, V. Vaidyanathan, who's CMD of Capital First, joins in to talk about business, the business environment, the policy outlook, and many other things. Mr. Vaidyanathan, it's great to have you on the show. Thanks very much for taking out the time. Firstly, congratulations on getting a no objection from the RBI for the merger. What are the other key approvals now pending for you?
Before we come to pending, let me just tell you what we already cleared for the benefit of your viewers. We already got approved from Competition Commission of India, the NHB, the BSE, the NSE, and now the NOC from the Reserve Bank of India. So I think a good number of hurdles, let me say, have been cleared. And now the next step is to take approval from the NCLT, which will involve getting clearances from creditors and shareholders.
Right, and by when do you hope to get all those clearances?
I think it could take anywhere between 4 to 5 months.
So you are reasonably confident that you would be able to go ahead with the merger process before Diwali?
We can hope so. We can hope to burst a few crackers with the merger.
Vaidhi, what would be the first thing you would like to change or you would like to implement the minute you become a bank or the minute IDFC become part of Capital First?
From day one, we want to think long, very long. So basically, we will look at putting all the pieces brick by brick in such a way that our funding becomes low cost, becomes long term, and it becomes more perennial. So I think a big focus will be liabilities. We really have a very strong asset franchise, which I think will continue to grow upward of about 25%, at least on the retail side.
You're also, these are tricky and challenging times, some would argue, because given the current fragile state of the Indian banking sector, RBI new guidelines, cost of capital, so some would argue that this is a very tricky time.
No, actually, I would say it's really a great time, actually. So when you say fragile, I think you're talking of maybe some state-owned banks who have had the challenges of NPA for a while. But if you see the larger picture, you can just see how a large economy of $2.5 trillion is growing at about 7.5%, 8% a year. And that's really phenomenal. So I think that if you see it from that lens, I think it's a very big story coming up in the next 10 years. And we are very confident we will be a part of that big story.
So a couple of quick follow-up questions. Every bank likes to maintain an identity. When we would be discussing about your bank in 2020 or 2001, what identity would you like to maintain? Would you be like to call as yourself as a universal bank with retail focus, or it will be a universal bank but the focus would be very universal, both corporate and retail?
Yes, first of all, it is a universal bank. Number two, we want to be very dedicated and very focused about what we want to do. We believe that we want to create a relatively simple bank. And in my opinion, a single bank is a retail bank because it just is so diversified, and the machinery in Indian economy, consumer and consumption is so much on the rise and so on. Those tickets will play really very well. On the wholesale side, we want to just play along with the Indian large corporate sector growing. So basically, if you think about it like that, we want to stay here. We just don't want to introduce any complicated products, any extraordinarily complicated treasury products. And basically, I am quite concerned with anything complicated.
Vaidya, congratulations firstly. So I'm interested in knowing if you would be heading the merged entity as the MD and CEO, or are there any key management changes that we're going to see? And more importantly, what's going to be Dr. Lal's role?
Yes, I'm going to be the MD and CEO and basically in the executive role. Dr. Rajiv Lal will be the non-executive role, and that is the role of a chairman. And I think, frankly, there is a tremendous talent available on both sides. And I think when we put the pieces together, we'll be able to build a really good team. And of course, there is a lot of interest from other organizations right now, let me tell you, who would also want to participate in this new bank which we're putting together. And I think that's a very big excitement, actually.
Tell me, how is the overall shareholding pattern going to change post the merger, and also how much will your shareholding and that of Warburg Pincus and IDFC Limited be at post the merger is executed?
Okay, let me put all three of them one by one. As far as IDFC Limited is concerned, at the current exchange ratio, at the time of as we put the pieces together, they will come down to about something like 38% or so. RBI, as part of the conditions, has insisted that they should retain 40%, which means they'll have to buy maybe 2% in due course before the merger, between now and the merger. As far as Warburg Pincus is concerned, I think they've sought approval for taking it up to 10%, and I think they've got it. So that's pretty much kosher. As far as my shareholding is concerned, we've done the computations. It's going to be close to about 3.45% in the combined bank.
You know, everybody's looking out for what the merged entity would, you know, deliver in terms of financial performance. What are the key challenges that you are hoping to face, and you know, how are you preparing for those?
Well, you know, there are challenges everywhere. You started the conversation by saying there is a challenge in the banking system as such. So this is everywhere. But I think this is going to be relatively, we are quite confident we will pull it through. Because when we think about sometimes our own Capital First Life, when we started off as an NBFC, and in those challenging circumstances, we've set it up. Now, this is a banking platform with a huge amount of savings coming with the country every year. You know, I think close to about $600 billion of savings is coming up every year. That's 30% of the incremental growth. So incremental GDP growth. So basically, we believe that really these are the things to focus upon. Our big challenge to focus specifically will be liabilities. We have to grow our CASA, we have to grow our savings balances, we have to grow our retail fixed deposits, and we need to use those funds to grow the balance sheet rather than grow it from wholesale deposits. And that's a structural issue, and I'm very confident we will do that.
Giving a scheme of 6% and zero deposit, should we expect any more innovation from you both in terms of rate and approach?
Well, you know, my officially taking over the combined entity is maybe 4 to 5 months away. So we'll probably wait for some of those announcements at that point of time. But I can safely say our focus is liabilities because assets is pretty much doing very, very fine.
One very simple question. For those who bought your share, they've benefited because of your focus on retail growth, your NPAs were low, you were lending in the right high growth areas, and you've managed to surprise everyone and comfort your shareholders. Now, becoming a bank would be a challenge. The rollout would come at a cost. It will impact your return ratios. So, for someone who's been, you know, part of your journey as a minority shareholder in Capital First, suddenly the option is that you become part of a bank. So, how would you justify that you should remain, you should keep faith with the management, and the bank also will be an outperformer?
I'm glad you asked that question actually, because it's an important question. As far as we are concerned, the core story of saying that we will be able to finance the small entrepreneurs, the small consumers, and grow that piece upward of 25% per year, that does not change at all. In fact, it accelerates because we have a perennial source of liabilities. Now, that is no doubt going to be the focus area. And as far as the combined entity is concerned, we believe that for the first 2 years, as the company focuses on building the liability base, there could be a certain expense structure that we might have to incur in opening up branches and so on. But as we are done with that investment phase, we are quite confident that's a one-way path to growth. So this is to be seen in a very, in a long-term investment sense. I think it's an absolutely a phenomenal opportunity. And you know, maybe for a period of 1 or 2 years, while we go through the investment process, I think all of you will probably view the operation developing, and I'm quite confident it will come out well.
Yeah, congratulations once again, and good to have you on the show and chat with us live. Thanks so much for taking the time out.
Thank you, Aisha. Thank you, Nikunj.